Silver has been on a wild ride. After peaking at an all-time high of over $121 in January, it went through a brutal correction, only to stage a violent rebound from its February lows. That surge caught a lot of traders off guard. It was the bounce many said couldn't happen. But just as things looked explosive, the market slammed on the brakes, triggering a vicious pullback that has everyone on a knife's edge. This brings us to the most critical question of the moment. Was that surge a bull trap, designed to lure in unsuspecting buyers before a catastrophic collapse? Or is this pullback the very last chance to get in before silver makes its run for new highs and beyond? In this video, we're going to break down the key technical levels that will give us the answer. We'll look at the fundamental forces of a historic supply deficit battling with the Federal Reserve. By the end, you'll understand exactly what is driving this market and what to watch for next. Let's get into it. To understand where we're going, you have to understand where we just came from. The recent rebound didn't happen in a vacuum. It was born from deeply oversold conditions after a brutal decline from the January peak of over $120 an ounce. The market was stretched, sentiment was apocalyptic, and the mainstream narrative was that silver's bull run was over. And then it began. It started with dip buyers stepping in at the critical support zone in the mid-60s back in February. This wasn't just retail panic. This was significant interest signaling that the price had fallen too far. We saw a monster reversal candle form as the price shot back up, a classic technical signal of a major potential shift in momentum. Over the past month alone, the price has surged over 17%. This move was a textbook short squeeze, fueled by thin liquidity and panic from those who were betting on a further collapse. Volume analysis confirms that dip buying at the lows was significant, and the reversal was validated as the price screamed past old resistance levels, eventually testing the mid-90s. It was a violent technical rebound that reset the entire board. But just as the bulls began to celebrate, the sellers woke up. Just as the rally was gaining steam, the market reversed, and it reversed hard. The rally hit a wall of sellers, slamming the price back down and putting fear back into the market. This is where the doubt creeps in. This is the moment that separates a real trend change from a devastating bull trap. A bull trap is a false signal. It's when a market that has been in a downtrend suddenly rallies sharply, convincing traders that the bottom is in and a new uptrend has started. Buyers pile in, chasing the momentum, only to have the market reverse and plunge to new lows, trapping them in losing positions. It's one of the most painful patterns in trading. So how do we know if we are being lured into a trap right now? The answer isn't in the headlines or the fear-mongering. The answer lies on the charts, in the specific price levels that will either validate this rally or expose it as a fraud. This is a battle of key levels, and the outcome will determine the next major move for silver. Now, let's look at the charts to see what's really going on. The entire bull versus bear argument for silver right now comes down to a few critical price zones. First, the bull case. The foundation of this entire bounce was built on a bedrock of support in the mid-60s. That's where the rally began. More importantly, this bounce has established a higher low after that bottom, which is a textbook bullish market structure. The most critical level for the bulls to defend right now is around $81.83. Think of this as the line in the sand. As long as silver holds above this pivot point, the bullish structure remains intact. A hold above this area tells us that this pullback is simply healthy consolidation, the market catching its breath before the next leg higher. Now, for the bear case, the bull trap scenario. The rejection from the recent highs in the mid-90s is significant. That area is now confirmed as major resistance. If the bears can push the price back down and, crucially, break below that $81 pivot, the bull trap could be sprung. A sustained break below $81 would signal that sellers have regained control, and it would immediately open the door for a rapid plunge back towards the $70 support zone, and possibly even the panic lows in the mid-60s. A move like that would invalidate the entire bounce and confirm that a deeper correction is still in force. This is a critical moment for silver, and these levels are being tested as we speak. If you want to stay updated on which way this market breaks, and you will want to know, make sure you subscribe to the channel and hit that notification bell. You will not want to miss the next update. This price action isn't just random squiggles on a chart. It's a reflection of a massive tug of war between powerful fundamental forces. On one side, you have a major bearish force, the Federal Reserve and the US dollar. In late January 2026, Kevin Warsh was nominated to become the next Fed chair, signaling a potential shift in monetary policy. A more hawkish Fed is often bullish for the dollar, which creates a headwind for dollar-priced commodities like silver. This fear is likely a key reason for the sharp pullback from the recent highs. Adding to that, robust economic data gives the Fed cover to keep interest rates higher for longer, which makes a non-yielding asset like silver less attractive. But on the other side of the rope is an incredibly powerful bullish force, a historic structural supply deficit. For the sixth consecutive year, The world is projected to use more silver than it mines. The cumulative 5-year shortfall is already over 800 million ounces. That is an entire year of mine production that has simply vanished from inventories, and the problem may be getting worse, not better. Fresnillo, one of the world's largest primary silver producers, recently announced it was cutting its 2026 production forecast. They are mining less, even as prices have surged. That is a massive red flag for the supply side. Meanwhile, industrial demand is exploding. Silver is essential for solar panels, electric vehicles, and now the build-out of AI data centers. This industrial consumption is a huge driver of demand. When you add in geopolitical risks, like China's export restrictions and central banks diversifying away from the dollar, you have an incredibly strong fundamental floor under the silver price. So where does that leave us? The short-term picture is a battle between technical sellers at the mid-90s resistance and long-term fundamental buyers who are accumulating on every dip. The current pullback is a necessary test, with the market trying to price in the risk of a hawkish Fed against the undeniable reality of a severe supply shortage. This brings us back to the key levels that will give us the verdict. The line in the sand remains the $81 to $83 zone. If the bulls can defend that level and eventually break cleanly above the mid-90s resistance, the path is open to our upside targets, including the psychologically critical $100 mark and beyond. A sustained move above the recent highs confirms liftoff. However, if we see a decisive break below $81, the bull trap scenario becomes the dominant probability. That could trigger a swift move back into the mid-70s, and the bullish thesis would be invalidated for the short term. This dynamic is reflected in analyst forecasts. You have a wide range of estimates from firms like Citigroup and others, with some targets reaching $120 to $150. Some even make a case for over $300 based on a historic compression of the gold to silver ratio. Those high-end targets aren't based on short-term chart patterns. They're based on the long-term irreversible supply and demand fundamentals. To wrap it up, silver's explosive rally is now facing its first great test. The pullback from the recent highs is designed to shake you out, but it's a necessary test of support. This is the Fed versus the fundamentals. It's short-term paper traders versus the long-term physical supply deficit. Watch the $81 to $83 support level like a hawk. That price zone will tell you everything you need to know about who is winning this war. What are you seeing on the charts? Do you think this is a bull trap, or is this the real deal? Let me know your price target for silver in the comments below. And if you found this analysis valuable, do me a favor and hit that like button. It helps the channel more than you know. Subscribe for more updates as this incredible story unfolds. We'll be tracking it every step of the way.